The biggest price jump in 4 decades is greeting Gen Z just as they graduate from college, move out on their own, and start their first jobs. Add in real estate prices that have put homeownership out of reach, plus stocks suddenly cratering after 2 years of gains, and it's a brutal welcome to the real world. What does this mean for the next generation? Is the US economy getting that bad? Find out by watching this video. The increasing ratio of rising prices, plunging stocks, and surging rents make it difficult to enter adulthood. To fight the 19th of June 19, the government has printed massive quantities of new money, and many economists predict a sharp rise in inflation. The United States was the first significant economy where inflation took root, as a wave of COVID-19 pandemic relief money from the government boosted activity and spending. The price then soon spread overseas, and as strong demand from buyers pushed up the cost of oil and other necessities, global shipping firms raised fees, along with companies faced with shortages and hiked prices. Also, when the U.S. central bank started raising interest rates to fight the problem, it had triggered the rush of money into the country, sending the dollar to its strongest level in 2 decades, along with raising costs in other countries even more. Also, the U.S. was hardly the only force behind the unexpected rise in the cost of living. The conflict between Russia and Ukraine also played a massive role by knocking out food supplies as well as disrupting energy markets, mainly in Europe. The United States Central Bank yanked its main interest rate to the highest percentage in 15 years in the year 2022, followed by many countries worldwide. So by increasing the borrowing price levels, the bank was trying to discourage activity such as business expansions and also spending on homes and cars and rein in the pressures of pushing up prices. But recently, it said it would potentially stop increasing the rates so aggressively as the officials are trying to avoid an unnecessarily severe economic slowdown and to gamble that much of their work is done. And as for the rest of the world, which has been dealing with the historic rise in the value of the dollar as sparked by the bank's moves, and analysts say the policy shift should mean relief. Even though the Fed has stated that it will slow its rate rises, the path ahead remains uncertain. Also, the bank has forecast that inflation in the U.S. will fall to around 3% by the end of 2023, but this is an outlook that seems quite optimistic, according to reports. The IMF's managing director Kristalina Georgieva says how the reopening will play out is unclear. So for now, the jobs market in the U.S. still remains pretty strong, and workers are pushing for higher wages, which could lead to higher prices down the road. Also, China's decision to loosen its COVID-19 policies may also add demand pressures to the global economy. These foreseeable effects of inflation will fall disproportionately on the shoulders of younger generations, who are much less equipped to deal with it than those who experienced the 1970s period of high inflation. This will seem bitterly ironic to those who believe that inflation is emerging directly due to the government's choice to take on massive debts to protect older generations. Worse still, the prospect of inflation hitting the young hardest means that more of the decisions made by the Bank of England and the Treasury will worsen intergenerational unfairness. Inflation is also particularly insidious for young people who want more say in our democracy because, as Milton Friedman stated, inflation is taxation without representation. What are your thoughts on this? Let us know in the comments section down below. If you enjoyed today's video and found it interesting, then make sure to leave us a thumbs up. And do not forget to subscribe to our channel and click on the bell icon to be always updated with the most exciting content as soon as it's uploaded. Thanks for watching. See you again soon in another video.